Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Stock market's up a little bit since we last spoke, even though it's just been 2 weeks.
Yes, and is this the Santa Claus rally arriving in time for Thanksgiving?
That's what it looks like. Typically, the very end of the year, the final 3 weeks of the year, are up weeks. Last week was an exception, but even then, the stock market went up after Christmas. But it was an unusual year last year where the market fell 20% at the end of the year. But historically, the last month is the strongest month of the year. And interestingly enough, out of all 52 weeks of the year, this week tends to be the one in which the market goes up more than any of the others. Not necessarily by points, but it's an up week. And most of the gains end up being made the day before the Thursday Thanksgiving holiday and then the day after. Those 2 days are most consistently up days the entire year. Now, the week after Thanksgiving typically does see a slight pause or even a dip to set up the run into the end of the year. So, in a certain sense, it's not that unusual, but I do think we could say this is a Christmas treat for stock market traders and stock market bulls because the S&P 500, the Dow, and the NASDAQ all made new highs yesterday. The S&P is making an intraday high today, and the Russell 2000 really broke out. It's not at a new high, but it had a nice almost a 3% surge yesterday alone, and that bodes well for individual stocks and small cap stocks in particular. So it does seem that we're set up, for a nice rally into the end of the year. It could be, though, that this could end up being something of a blow-off top for the rally that began in December, or maybe even the entire bull market for that matter. We're going to end up, if this continues, seeing the stock market averages reach an extreme overbought condition in terms of some of their technical indicators, such as the RSI indicator, which hit a historic overbought reading on the Dow in January of 2018, and then immediately the stock market fell 10% in almost overnight.
Do you think we're going to have one of those corrections coming up perhaps at the start of the new year where we have a 10 to 20% drop, then it's back to a rallying business as usual?
Well, we'll have to see. It's hard to predict it all exactly ahead of time like that, but I do think most likely there will be some 10% decline. There's almost one every single year. This year has been an exception actually so far, but we had a 20% decline right at the end of last year to set up this year. The thing what I don't know though is if it comes, will things be business as usual? Because the way things stand now, there are signs of slack in the economy. The Federal Reserve has had to lower interest rates 3 times this year. Now, at the last meeting, they said they're on pause, but they also said they foresee no rate hikes in the foreseeable future, certainly not next year. And the Fed Fund futures market has a 0% chance of any rate hikes next year. and a 50% chance won by July, and over 60% by December of 2020. For a rate cut to happen would mean that the stock market would have to dip 10%, and there would have to be growing signs of economic weakness. And we did see the yield curve invert in August, which is also an accurate predictor of a recession, typically 12 to 16 months out in the future. So that would suggest that the second half of next year, there's a chance for recession. And I don't really see indications of some accelerating economic boom. For instance, the recent news has been that corporate investment spending is actually negative if you take out the investment spending being done by about half a dozen large technology companies like Apple and Amazon and so forth. Or I should say negative, it's flat. So, there's no, I don't know what's going to drive the next economic boom. To me, we're sort of in a period of stasis or limbo in which, not a whole lot's really happening in the economy, and all the excitement is really in the stock market. That's where people are making money, not, or flipping houses or something. At least that's what real estate agents say.
We'll have more with Mike Swanson right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Swanson. Mike, U.S. new home sales are at their highest level in 12 years. Could that be sparked by the very low interest rates? Get a low 30-year mortgage. It's going to be very healthy for anybody who buys a new home.
Yeah, definitely. I mean, it's the low interest rates that drive people to refinance or to consider buying houses where they wouldn't have been able to afford them if the rates are just a little bit higher. I don't know that necessarily makes housing a great, attractive investment. I don't, just because rates are low doesn't necessarily mean you're buying at the right time. Rates were low, around 2005 and 6, and, that was the height of that real estate market. So it's interesting to see and watch, but yeah, if you got a lot of money, I think it's more interesting to buy things when they dip. And you don't need to afford, taking out loans for it. But there's all kinds of ways one can, invest in real estate. Another way is to buy REIT stocks, which, pay yields and dividends, and REITs have been one of the top performing sectors of this year. However, they also tend to correct when the stock market does too. So I would wait for an overall, market dip of 10% or something before I would get involved in the REIT sector.
Thinking long term for real estate, of course, everybody remembers the U.S. housing bubble and what the result was then. Are people still worried about that?
The only people I've heard worried about that are people referring to the Canadian real estate market in Vancouver and Toronto and so forth. And the prices there have come off a little bit, but I don't, think they're going to crash or something like some of these people worry about. But personally, I don't know anybody in the United States, anyone who's worried about the housing prices declining. So it's almost as if all that had never happened. Just like the stock market, very few people were worried about the stock market going into a bear market or having a big drop, except for the people that tend to be bearish on the market all the time. In the end, price action, whether it's housing, Bitcoin, gold, drives people's sentiment and the way they feel about it. And typically what has gone on for over a year is what people tend to expect to continue going forward. But obviously things change, but generally speaking, people, aren't willing to adapt to that and then get blindsided when things shift in a meaningful way.
Yes, people's long-term memories tend to fade, and even bad things just become almost a fond memory over time.
Yeah, and one sign of this, which I know there's a lot of people investing in cannabis and marijuana stocks, and I think there's some hope for a rally later, but it's kind of an overall lesson of what we're talking about. This sector had been one of the hottest sectors in the entire stock market, let's say from 2016 to this spring. You had stocks like Canopy Growth, Aurora Cannabis, Tilray, and these were some of the most popular stocks to own by individual investors. In fact, Robinhood is a popular broker in the United States. They give you a list of the top 100 stocks owned by the most number of people. And Aurora Cannabis is number one at the list. It's been number one on the list since the beginning of this year. But inside the more speculative small cap penny stock world, these dope stocks became the big thing there too, especially last year. And when the stock market fell 20% in the fourth quarter last year, before that drop, Apple was the number one stock to own. When that stock was done, Apple got beaten down, and some people sold that and jumped into these marijuana stocks. And they had a good run from January to March, and now, as most people listening to your show would know, the news for these marijuana companies, their earnings have been absolutely miserable. They're reporting losses. There's a lot of uncertainty in the whole entire industry. They've been having trouble selling as much marijuana as was expected in Canada, and the legalization in the United States isn't going on as fast as expected. But what was totally unexpected to the people that bought these stocks is the cost for growing this has been higher. Growing the marijuana has been higher than anyone expected. So what has happened is these stocks have crashed. I think it's fair to call it a crash when Aurora Cannabis is trading at 240, was at 6 in September, and was at 10 in May. Now, when a sector such as this ends up going into December as being the worst performing sector in the entire stock market, which is what this sector is now, what typically happens is a lot of people will have losses and they sell ahead of the New Year's because they want to use it for tax loss selling to offset the taxes they pay next year. So I think that's going to hold these stocks down. However, that sector, which gets beaten up the most, suffers from tax loss selling. When January comes, tends to then rally because the selling is pretty much flushed out for the time being. And shorts who took positions and have gains also cover in January and book their profits. So the dope sector is actually a spot now I'm eyeing for a potential trade in January after what should be tax loss selling plays out. So that might be something that we revisit when New Year comes, but the only way I can buy something like that or do a trade like that is being ready ahead of time and keep my eyes on the action.
We'll have more with Mike Swanson when we return.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, what do you think is going to happen with gold?
Well, gold has had a tremendous rally, of course, since June when it smashed through 1350, which had been resistance now for 4 years on it, and it went up to 1550, and of course now it's around 1450. So it's been pulling back since Labor Day, and that's kind of diminished some people's interest in gold. However, I think it's a pretty much almost a no-brainer to buy it here or own it. And the reason why is because the number one thing that's happened with gold this year, which is actually unusual, is it's trading almost lockstep with the U.S. Treasury bond market. So when bonds go up, gold's been going up, and bonds go up when interest rates go down. Now, if we think about what we talked about earlier with the Fed Fund futures having 0% chance of a rate hike next year, that means the downside for bonds is limited, and that means the downside for gold is limited. And also, when the time comes that the Fed lower rates again, whether that's next year or the year after next, gold will then completely explode. So the way I look at gold, it's locked in a range for now, digesting the big gains it made from May to Labor Day. With resistance probably around 1525, support in the 1425 to 1450 area, not much downside from here. So I think it's time to accumulate gold and silver as long-term investments. And people in the United States who think of defensive investing as putting 30% or 50% of their money in bonds, they need to, I believe, consider putting a portion of that money also into gold and into silver, because they're not only trading lockstep with the bond market, so they'll go up when bonds go up. They go up more on a percentage basis, and there will be a day if there's a severe recession, rates go back down to zero, the bonds won't be able to go up anymore, and people will be piling into gold even more. So I think gold is critical to own as a long-term investment for people, but some people have a shorter time frame, and even there, it's worth taking a look, because mining stocks are doing well, and gold at these levels, and silver too, is good enough to make the top mining stocks break out and do well, and small cap stocks do the same. So, for example, the stock, I don't have a position in it now, but Wallbridge was 30 cents about at the end of September, and as we're speaking is about 60 cents. So that's 100% gain. Gold hasn't had to go up, and Aftermath Silver, which I do own a position in, it's just testing a new high today and is up almost 4 times what it was in July. And I like the stock, think it's going to keep going up. The point is that, and it's not the only one. I mean, you go to HowStreet.com and people can find out about a lot more. The point is that gold and silver, just at these levels, is enough to get good action in the top small cap mining stocks, even if it might be another 6 months or a year before gold and silver make new highs. But that's okay, because it's fun to own gold and silver like people own bonds and think that I'm not just going to make a percent or two. I'm going to make an absolute killing over the next decade.
Mike, thank you so much for chatting with us.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. Thank you so much for listening. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.